Hello and welcome to tonight's webinar titled Rangebound Trading Opportunities. Thank you very much for your attendance in advance, and as always, please feel free to ask questions throughout the broadcast this evening, as those questions always lead to other discussions, maybe about trading psychology, maybe some other relationships out there, some other talking points. So please feel free to use that questions tab, and I'll make sure that I go ahead and read through those and try and answer them as necessary. All right, so there's my information there. If you have any questions, you know how to reach out to me, and you know that I always post every day a commentary at dailyforextradingedge.com. So I didn't post today as we wrapped up a pretty big trading day today with a FOMC announcement, so I'll make sure that I have something there very early tomorrow morning, but there has been something there the past few days. All right, sorry about that. I was just checking in with some people's questions and comments. So let's slide through here and just leave this disclaimer up for just a few minutes. And we will let you read that, and obviously you need to be aware that you are trading leveraged products, so just be very, very careful of that. So the outline tonight, just a quick fundamental catch-up, and then we'll move into technical analysis. We'll talk about range-bound trading in the VIX, and then your opportunity to do some one-on-one work. Fundamental analysis. So fundamental analysis, let's discuss, especially what happened today, current events. We'll use Forex Factory, so I'll toggle back and forth between some of those tools, and then we'll go into the segue into the chart. So I'm going to just leave this up for a moment so you can see this before I toggle into some of the other programs here. Then there's a question that came through, am I going to use Forex charts? So just while I leave this up here so people can see some of these tools, yes, we are going to use Forex charts, absolutely. Thank you for that question. Yes, we're going to go there pretty quickly and mostly stay on the Forex charts today. So let's just jump into some of these tools. So just bear with me as I switch some of these programs here and I go over to another screen. So the Forex calendar, if you're not paying attention to it, you can link directly from IBFX.com right here into Forex Factory. If you weren't aware of activities going on today, as I mentioned, we had the Federal Reserve, and why I want to hone in on that, and it's a great day to talk about range-bound trading opportunities. There wasn't much of a reaction to the Federal Reserve, and what the Federal Reserve, not only here in the United States but around the world, what they're doing is they're basically saying it's okay for the markets to have bad news. If you see this durable goods numbers that came in today, much, much, much below expectations, well below expectations. Expected at -1.5, it came in at -4.2. Last month also it came in poor, but yet the Federal Reserve says no matter how bad the news gets, the economic data, we're here for you, okay? So that's what you need to keep in mind, is that the Federal Reserve is basically saying it's okay for economic news to be good. That's good for equity markets, and that's good for the financial markets around the world for the most part, and if it's okay for it to be bad. So just keep that in mind, that the Federal Reserves around the world, you know that there's European austerity measures and things like that. They're basically saying it's okay out there for bad things to happen because the Federal Reserves are going to step in around the world. So jumping from that, I just want to show you, I know a lot of you pay attention to Raggy Horner, and look today. She posted something today, and I'm going to look for it on here if I can find it. This is IBFX's Daily Trading Edge, and she wrote a commentary about the Fed aftermath. And I just have to move the panel here, so sorry that I'm jumping here. The Fed aftermath, and what she said here is she said it was an unexpectedly quiet day. And so she's right, unexpectedly quiet day, but that's the thing, is we're getting used to these somewhat quiet days. I'm not saying that those quiet days don't provide opportunity, and that's what I'm going to show you. But the point is that we usually expect a little bit more fireworks and things like that. So just keep in mind that we're looking for volatility, and we're just not getting as much as we normally do because the Federal Reserves are there helping out. So Raggy Horner, that a lot of you follow, wrote a great article, and this is that Daily Forex Trading Edge where I post every day, and she also posts. So that's a good way to understand the fundamental news going on out there. So segueing from fundamental news back into the presentation, your technical analysis, what are traders doing with the fundamental news? So we're looking at major trends, support, resistance. We're going to hone in on support and resistance today. We're going to look at some live intermarket relationships. And then here I just want to show you range-bound trading. So we're going to talk about the lower VIX, the lower volatility gauge. And then I'll show you examples in Forex and intermarket relationships with equities, price action, and then keying in on those words, support and resistance, using those to set up trades. So someone asked if we're going to go into the Forex markets. Yeah, we're going to go. We're going to start with equities first, just so we can set the table today. So let me just move into TradeStation here and show you this chart. So what I want to do is show you that I want to get to what I want to show you is that equities have been in a range for about 9 or 10 days, and there's been some volatility in different equity ranges, but there's been sometimes there's not that relationship that we're looking for. I like to key in relationships between equity markets and foreign currency markets and things like that. And sometimes those equity markets relationships between foreign currencies aren't there. The bottom line is you've got to know your trading entity, whether you're trading the euro and the pound, whether you're trading the euro and US dollar, whether you're trading the Aussie and US dollar. You have to know each and every individual entity very, very well. So just jumping in here into the platform, I just wanted to show you that we're in a pretty big trading range in the S&P, and this is the SPY, which basically represents the S&P 500, a major equity index, and it's in a very, very, very tight range going back and forth, okay? Moving from that into foreign currencies, because I want to spend most of the time in foreign currencies, I'm going to bring up one that I've been talking about on that Daily Forex Trading Edge very, very often. Look at the United States dollar versus the Canadian dollar. Ever since this is, you can see the date here, late January, we went from around 1 penny, just above 1 penny, just above parity, down to the low 98s. So we're under 2 pips, and you're talking most of January, February, March, and most of April now. And we just kind of broke out of that range down towards the bottom side of it today. I don't know if you could say we truly broke out of it, but that might have some relationship between equity markets going higher. Good news out of the Federal Reserve. The Federal Reserve is going to continue to weaken the U.S. dollar maybe, and obviously there might be some relationship there. But look at it going back and forth. We call this oscillating, and sometimes you might use oscillating indicators such as relative strength or such as a MACD, and it just goes up and down and up and down and up and down and up and down, back and forth. It's not trending up, it's not trending down, it's actually trending sideways. If you look at it a little bit more closely on a 4-hour chart, you can see that the question for you is, can you read support, can you read resistance? These purple lines, resistance and support, and I've had these on the daily market commentary quite often, playing this range. Based on fundamental news, could you look at the charts and say, I think that the US dollar is overbought or oversold in this area? You combine it with fundamentals. As I kind of will write about in my market commentary tomorrow, I don't really personally like to trade during the Federal Reserve days just because there's a lot of news to absorb. So maybe today wasn't a trading day, but was there a reason to say it's going to break out to the downside. Well, based on maybe what you read from the Federal Reserve and other things, maybe you saw that. But for the first time in months and months and months and months, it is breaking out to the downside. So just be wary of that, that maybe we could use that old adage, is old support going to become new resistance? We don't know, but that's why we have to pay attention to the fundamental news out there in the United States economy as well as the Canadian economy. So that's a really good snapshot of a range-bound trading opportunity. But hey, there's hundreds of pips. There's 100 pips going up and 100 pips going down and 100 pips going up and 100 pips going down. You don't have to capture all of it, but at least you can see that support means people are stepping in and buying it. We want to buy it near support. Resistance, people are stepping in and selling it. We want to sell it near resistance. To play around right around 99 or 99 and a quarter or 99.50, your risk reward is 1-to-1 because you're in the middle. I want you to have a 1-to-2, 1-to-3 risk to reward, so it makes more sense to try and sell it at resistance. Maybe you risk 30, 40, 50 pips, and you try and buy it as it goes down 40, 50, 60 pips. Risk 1 to make 2, risk 30 pips to make 60 pips, risk 40 pips to make 80 pips, risk 20 pips to make 40 pips, whatever it may be. Use the charts to help you define what's realistic. So the key word is what is realistic. It's not realistic to say I can make 300 pips or 500 pips. It's realistic to say for the past few months it's been moving up and down about 100 pips. It's realistic for me to risk 30 or 40 or 50 pips to make 50, 60, 70 pips of those 100 pips. It's not realistic for me to risk 200 to make 400. It's realistic for me to risk 50 to make 75 or 50 to make 80 or 50 to make 100, something like that. The charts tell us what's realistic. The charts tell us what we should be going for. Just checking to see if there's any questions in here before I move to the next range-bound opportunistic pair, if you will. A lot of you guys follow the Euro-US dollar. Why not? It's a great one to follow. On a daily chart, and I can draw some trend lines across here, it went from roughly, I'll draw one more so that you can see it, and I'll have to move this panel here, so that's why sometimes I pause, because the panel actually sets up. I'm going to delete that actually because I clicked on the wrong button. Everything is right click here. I didn't want a trend line, I want the horizontal line, so I want to click on this one, and if you leave your cursor here, it tells you, okay, now I'm on the right one, the horizontal line, and roughly, and this one's a little bit harder to tell, but we can kind of put a rough guideline in there. What we have here is 3360 or so on the top, except for just a little blip up there for a few days, and much more realistic to say 2990 on the bottom. So about 3.5 pennies, 300 to 350 pips, going back and forth and back and forth. Right now, we are right kind of in the middle of this top line and this bottom line. Is it a good risk reward for you to say, I think it's going higher or lower here? Or would you rather be a buyer down here at support and a seller up here in resistance? Going long or going short here, a little bit more difficult to say that I have a good risk reward here. My risk reward is more 1-to-1 here, where selling it short up here, I could risk 50 or 70 pips to make 100 or 150 pips, and buying it down here, I could risk 50 pips and maybe try and make 100, 150 pips. My risk reward is better buying it at support and selling it short at resistance, but not in the middle, not where we're at right now. So those are two pairs that I wanted to show you that are showing good opportunities in a low volatility market that are range bound sideways trending Forex pairs. The markets can trend up, the markets can trend down, and the markets can trend sideways. Sideways it is a direction, and we should be able to see opportunities and make money from it. No guarantees. That's why we have trading plans, as we saw with the U.S. Canadian. It broke down, so some person might have said, I want to buy it because it's at support. Well, this time it doesn't hold into support, and it goes down and blasts through that support level. That's why we have trading plans, and this person may have been stopped out because they said, I'm only trying to make 50 or 75 pips. I'm only going to try and risk 25 or 30 to make that 50 or 75. And as it goes 98.75, let me click on my crosshairs, 98.75, 98.65, 98.55, 98.45, it behooved that person to not stick with it and say, oh, I'll just stick with it and have a loser and see what happens. No. We found out information. I don't care if it's a winner or a loser. Losers give us new information. We have to be good losers. Losing is part of the game, and we move on to the next trading opportunity. So this person may have bought it at support. They may have gotten stopped out. That was their trading plan. Thank you very much for having a stop in place. I'm glad I didn't risk all of my account. I'm glad I didn't over leverage or anything like that, and I'm on to the next trading opportunity. The next trading opportunity might be, as I said, old support becomes new resistance, and this thing might pop back up and go 98.20, 98.50, 98.70, and they might say, this is a good place now to get short. Old support becomes new resistance, and they build a new trading scenario. Who knows? Maybe this pair drops down to 98 or 97 or 96 or 95 because oil prices go up high, equity prices go higher because of the Federal Reserve, the weak dollar, and the United States dollar just carries the U.S. dollar lower. We don't know, but we'll learn new information every minute, every day, every week, and depending on our trading time frame and our trading personality, we try and make an educated, fundamental, and technical decision using the charts, using trading plans. All right, so I'm just going to rip through just a couple other currency pairs. I think that we can look at one other that is kind of similar where it's starting to get a little bit more range bound, kind of on a bigger picture. So this is the daily chart of the Aussie New Zealand dollar. And again, just as of late, working from right to left, for basically I'll put the crosshair on for you guys. Let's see now. So this is since 3:30, so almost a month, almost the entire month of April for the Aussie US dollar, 102.40 at the bottom and roughly 104-ish. And again, I've just got to move this panel, so bear with me. 104-ish on the top. So if I drew we could probably get this down to a 4-hour chart. So here we are in late March, and I want to draw my horizontal line again, something like that. On top, there's my resistance roughly. A little bit easier to point out the support. The support's a little bit cleaner. The support is definitely much cleaner down at the 102.50 area right down there. And then you have resistance. So again, a couple pips of movement back and forth, plenty of movement, but the question that I have for you, are you patient enough to wait for that location to come into play? If you're going to trade it right here, you're probably going for a smaller amount of pips because you're kind of in the middle. Up here at resistance or down here at support, maybe you can take advantage of a larger move. Remember, I don't care if you're a day trader or a longer-term trader. A day trader can get in at support here and be in for a few pips. A longer-term trader can be in for 100 or 200 pips. We can get in for the same reason. We might not be in it for the same length of time. We might not be trading the same amount of contracts. A day trader might put on bigger size because he's going to put a really tight stop, maybe only risk 10 or 15 pips or 20 pips to try and make 20 or 30 pips. The longer-term trader might put on less contracts, risk 50 pips to make 150 pips, but we saw the same thing. That's the nice thing about charts is we're looking for the same thing no matter what time frame we are. But you have to be aware of this bigger picture and what's going on. Trading in this range right here in the middle right now at 103.50, a little bit different of a setup for a longer term and shorter term trader. I don't know if a longer term trader gets as excited. Maybe you could say that there's some local resistance right here, and I think that's very valid, right here around 103.80 or so. So we touched it today and we actually bounced off. So maybe you use that area as your one little mark, 103.80. Until it gets above 103.80, maybe you use that as a selling opportunity with a stop just in case, because it can go higher. Then it goes higher and maybe it heads up towards 104, and then you look and see if there's some resistance up there. Being patient, waiting for support and resistance, whether it's intraday if you're trading, within that day, or interday and you're trading multiple days in a row, being patient and waiting for those opportunities is very, very valuable in these markets that have a little bit lower volatility that we can't count on for tons and tons and tons of movement within a day. It sometimes takes us a little bit longer to shake out, but it's still really, really good opportunities out there. That's what I wanted to show you today, is just that there are good opportunities out there. You just may have to adjust the length of your trade. You may just have to adjust how long you wait to get into that trade. So in a lower volatility environment, when Federal Reserves and central banks around the world are bailing problems of countries out like Italy and like Spain and Greece, and here in America when we bailed out banks and bailed out companies and things like that, you've got to adjust the frequency of your trading and how long you trade for, because you just might not be able to expect tons and tons and tons of movement, but you can still expect to get off trading opportunities, and you can still expect to use trading plans and management, and I think you can still have success in the markets. You just have to adjust and be realistic. That's the key word. Be realistic and let the charts, let your analysis do that for you, make you realistic, help you to be realistic. So we went through some examples in Forex, briefly just talked about equities and those intermarket relationships where the equities are in a tight range as well for now. Certain sectors are a little bit more volatile, but in equities, obviously, you get a lot more sectors and stocks to look at. In Forex, we only get a few pairs for the most part, and if you're focusing on the majors, you get a handful of pairs to look at. So let price action, let support and resistance help you define that risk-to-reward setup. Your opportunity. I work with people one-on-one. I help them find out what's achievable for their individual situation. That's the key. Some people have trouble because they don't know what's realistic for them. If you have any questions on that, it's a very, very short interview that's done over the phone or over Skype, and I'd be happy to do that with you and send you a piece of paper that I type up with my unbiased review of what's available for you. You are the system. Until you know what's best for you, it's very hard to approach the market. So please take advantage of that. Please take advantage of you digging deep inside and saying, I'm an individual trader. What is my situation? How much time can I afford to be in front of the markets? How many pips should I be risking per trade? How many trades should I have on at once? How many pips should I be risking? How many contracts should I be putting on? Keep that in mind, that you've got to be able to answer those questions before you can go and attack these markets. And once you get over that hump of you being realistic for your situation, then I think that you're set up for success in the markets. Review. Fundamental events, keep an eye on the big macro factors out there, such as Federal Reserves like today, and things coming out of Europe, and France is coming up with an election and things like that. The big macro news. The micro events would be the little economic events that are for your currency pair, whether it's the US, whether it's the Canadian, whether it's the yen, whether it's the pound. Be aware of those. Don't get caught by surprise. But like I said, take those kind of with a grain of salt because they're being thrown in the background as these big macro events are taking center stage. Technical analysis. Use the charts to tell you and give you some guidance. Use them to see what the trend is. Use them to see major levels of support and resistance so that you can use those to your advantage. Understand what's going on in other markets. All right, they provide trading edges sometimes, not always, but sometimes. It all depends on what's going on out there in those individual currency pairs that you're trading. Range-bound trading, price drives everything. Be patient and wait for good locations using support and resistance. Like I said, I don't want range-bound trading to be a negative. I want it to be a positive, that what if markets range for months and years, so what? You'll be able to be successful and be able to be profitable and hopefully have some good trades. So just to wrap up here, the next webinar will be in a few weeks in mid-May. I think we're going to be talking about Fibonacci Fibonacci retracements. In between now and then, please take advantage of the education that I put out and the other analysts, like I said, like Raggy Horner, who put out a great article today, the other analysts at IBFX, to keep you on top of the fundamental and technical analysis. I'll make sure I get a post out on Daily Forex Trading Edge tomorrow. And then also there's the videos. These are recorded, so be aware of those. You can go to the YouTube Interbank FX YouTube site and see the past videos. I think there's about 20 of mine up there. And then also I do some intraday market commentary at the IBFX Connect site under the Locals Take. So lots and lots of great help for you guys. Thank you very, very much for joining me. I hope that you're excited to be able to take part in range-bound markets, because throughout your trading career, you'll have different markets to take advantage of, trending up, trending down, and obviously trending sideways, or AKA, otherwise known as range-bound markets. Be excited to take advantage of range-bound markets. They can be a lot of fun to trade, and they can set us up with nice risk-to-reward trades. So keep in mind trading plans for each and every trade. Thank you very, very much. Let me just see if there's one last question coming in. Do you think it is better to trade range-bound in short, long time frames? Do you think it is better to trade range-bound in short or long time frames? Again, it's a good question. I think I understand it. Like I said, I don't know the individual. Most people that are trading with account sizes of 10 grand or 5 grand or under, I would say that you are a shorter term trader because you don't have the room to risk a lot of pips just because of the relationship with the broker and things like that. So you're going to probably be trading them on a shorter time frame. The larger your account is, then you can start to risk those 50 pips, 100 pips, 200 pips. Most people are trading intraday and risking 10, 20, 30 pips, something like that. But you have to look at each day and say, is there a reason to risk 10, 15, 20 pips to make 20 or 30 or 40 pips? Maybe today that's not happening. Maybe tomorrow there is. Take one day at a time and let the charts intraday over a few days set up for you and then help you with that. One more question coming in. Let's see. What do you think is the best indicator to use? First of all, like I said, you're the ultimate indicator. Know who you are first, then know how to read charts. Know trend, know support, and know resistance. Know what's going on fundamentally to help you adapt when and how frequently to trade, okay? So fundamental and basic technical analysis. Then you can start to put on Fibonacci's, which I'll talk about in a few weeks, moving averages and things like that. But honestly, trend, support, and resistance is the best place to start because it keeps you out of trading out of bad locations. Then once you understand where good locations are, then you can go ahead and throw on other additional indicators. But please, please, understand what an indicator is. Understand when a moving average is to be used. Moving averages work better in certain markets that are trending, not range bound. Know how to use a relative strength index or MACD that you work better in, or moving average convergence, divergence that work better in range-bound markets than trending markets. You have to know these indicators and know what they mean and know how to use them. But like I said, I can't answer these truthfully because I don't know who the individual is asking it, and that's why I said is I help people learn what they should be focusing on for their trading situation, for their account size. Everybody out there is different, like I said, so I'm talking on a mass level now, but I hope that you guys can start to filter information for you as an individual. But very, very good question. There are great indicators out there, the great tools out there, your platform, you can grab them all there, but you've got to do a little bit of work to know when they work. If you go to the YouTube site under Interbank FX videos and go to trading in the new economy area, so trading in the new economy, those are my 20 videos, and there are lots of videos there on Fibonacci's because I love them. I know how to use them. Not that they are the holy grail and they work every time, but I do like them. They're very, very good for keeping me. Sometimes they keep me out of the markets more than they get me into the markets. That's the whole point, is I'm not always using indicators to get into the markets. Sometimes I'm using indicators to exit the markets or indicators to stay out of the markets. I combine them with my fundamental analysis. I also did a moving average crossover webinar there as well, I think. So lots and lots of good information there, but you have to know first yourself. You have to know fundamentals, what's going on, and volatility. Then you have to know basic technical analysis. Then you can start to layer in some advanced technical analysis such as the tools and chart patterns and things like that. So happy trading. Look forward to seeing you guys in between now and then on the IBFX Connect site, on the daily market commentary site, and then in a few weeks for our Fibonacci retracement webinar. Have a great rest of the week. Thank you very much.